Good morning, Eric Mashinsky here, Gold Investment Letter. It is March 12th, 11 a.m. Eastern, and I wanted to put out an update on First Vanadium Corp. We've had quite a roller coaster ride in this stock, really since we got involved in it. But recently has been quite a whiplash, both up and down. So just to go back and take a step with our history with this stock, when we first got involved at 14 cents Canadian back in October of 2017. So we've been in this deal for almost 18 months now. And initially, this thing came out of the gate rocking and rolling. I recommended the stock around 30 cents Canadian to free members, but 14 cents is where elite and some premium members financed the company and where we began taking an initial position. And, the thing was a massive performer for us in 2018, despite the terrible resource market. It was a bright star for us, went to $2 a share in literally a 7-8 month time frame. And so that was a big bonus, but you can't count your chickens, ladies and gentlemen, because, even though some of our folks certainly took profits up along the way, not everybody did. And Vanadium going as crazy as it has and as it was, with a lot of enthusiasm around the Chinese increase in their legal aspect of producing steel structures in the country, having a 30% increase in vanadium being required, brought a lot of hype and enthusiasm into the market. And that was pretty much in the fall of last year, which is when we saw most of that happen. The initial stages of those laws were going to go into play, I believe it was in November of last year, and really have just come into reality into the first quarter of 2019. But certainly the market got way ahead of itself on the upside. We saw the vanadium price go into the 30s per pound, which was up 10x from just a few years earlier. And now we've seen the price over the course of really since November of 2018, a steady decline from the low 30s all the way back down to around $15, $16 a pound. Right now we sit in the US and European market about 17.5, China just over $17. It looks like we've been basing in these really for a couple of months now. And so anyway, that's the state of the vanadium market. First Vanadium itself had a treacherous downfall over the course of that time frame, with the vanadium fall all the way back down to just a few weeks ago when we dipped below 50 cents, down from $2 on the week of February 19th. I'm just looking at my weekly charts to get my facts right. But right after that, we saw a powerful reversal. And I've been pretty consistent putting updates out all through that decline, certainly around the bottom, around 60 cents. I had put out a couple of different bullish notes in the month of February, and all of a sudden, voila, they come out with their new resource estimate, which is very, very much improved, both in terms of grade and in terms of pounds and tonnage of vanadium. And the stock all of a sudden doubles in 2 weeks and goes to $1.08, which was hit 1 week from today, on the 5th of March, I believe. Maybe it was the 4th. Anyway, we saw that stock run right back up to its 200-day moving average. The company did a good job with corporate communications. There were some third-party letter writers that came out with coverage around the resource update, which I was very happy with, and most people were very, very pleased with. And all of a sudden, we saw a reversal, and the reversal really started to kick in just over the last few days on still big volume. And, voila, all of a sudden we're back down to 61 cents Canadian as I write this morning. There is absolutely a culprit and a reason for the decline yesterday. And I'm going to talk a little bit about that. But before that, the previous couple of days before that with the decline, it could just be regular market forces. People got hyped up. We jumped it up. Some sell-off came after people thought it was getting overheated. It hit the 200-day moving average, which is a very clear resistance point on the chart. I had highlighted that with our premium members when it touched. But look, people buy, people sell, they do it for different reasons. It's always a little bit difficult at some points, and you don't really need to always see why these things happen, but sometimes there are material reasons for it. Yesterday, one of my colleagues, another newsletter writer, had come out with a pretty critical piece on First Vanadium, and this came out in the morning, which absolutely was the primary driver of selling yesterday, which really took the stock down from the, let's see where it closed, the day before, which we were still in the mid 70s, and then all of a sudden yesterday, we closed down into the 60s. Today the volume is much more quiet this morning. Is this the bottom right here? I don't know. I think there's a chance we could retest the 50-cent area, which would be good support again. We could skyrocket right from here. The fact of the matter is, and I'm not going to get into a tremendous amount of details, a lot of you that follow microcap.com, I have great respect for Danny Deadlock, love his writing, love his picks. Don't have anything bad to say about him whatsoever. Appreciated the fact that we were sort of on the same team with First Vanadium for a while there, and now it looks like there's been a bit of a divergence. His big gripe comes down to, and I'm going to really just kind of read this while I'm talking about it. Danny wanted information on costs, on processing costs, really the conversion and process of the shale into a final commercial product. He had run his own models with some of the people that he works with last year that were very, very bullish, I think, but he didn't want to release that stuff until he really had a final cost process in place, which is very understandable. From dialogue he had with Paul Cowley, the CEO, it looks like he was really hoping for some information by November of last year. And then it was bumped to December, and then there would be some type of numbers, quote unquote, that would be out. But then he mentioned the company's issue they felt would be that processing and CapEx would be something that needed to be included only in their initial economic study. He just reiterated that he wouldn't publish the valuation model until he knew a reasonable idea of the CapEx and processing, very understandable. And then he had not seen any numbers by December, but he had heard an economic study might not be released until the end of 2019. He was very taken aback by this. And then he really just goes into the fact that, microcap investors have patience to a degree, but he's really just disappointed that there was no more information that came out from Paul and from the company. And he said that he thinks there's a lot of shareholders who would free up cash and look to buy in later in the year because a lot can happen between now and the end of the year. Okay, so this was a veiled sell recommendation. It was a sell recommendation. He didn't come out and say sell First Vanadium, but he said sell First Vanadium. I mean, it was a very, very negative email and update to his shareholders, and a lot of people picked that up and they dumped it. So be it. Not my thoughts in this particular case, and I have some areas of disagreement. I just spoke with Paul Cowley at First Vanadium to get a bit of a better understanding of what's going on with that communication, but also, most importantly, what is the communication that I've had with him and what is now happening. Now, I am absolutely on board with Danny's thought of needing these processing costs, but you can't have a management team come out with their own internal assessment of what they think they're going to have for CapEx and processing without doing an economic study with a third party. You can't trust it. It's required to have a third party do this stuff because people, and Paul's an honest guy, and Danny has said that, they could come out and speculate, but I mean, I would essentially use that paper to, wipe my, basically at the end of the day, because you got to see the study done. You have to see a lot of details done. There's also a huge piece that needs to be put into place before they can even start that economic study. They've not finished their metallurgical testing. The metallurgical testing is going to take them another couple of months to get done. They've had incredible success in terms of recovery rates on the front end of the process. They have another back end of that process that they've been working on that they still have to tweak. That's going to take them another 2 months, maybe up to 3. I'm counting on a June release for that information. If you don't have the purity of a commercial product that you can process first, Who cares what you think it's going to cost you? I need to know that they're going to have that done initially before worrying about figuring out what the CapEx and OpEx is on this stuff. That's going to be a big benchmark, and that's a couple months away. I think that if they come out to the market and prove that this metallurgical flow sheet is tight and that these guys have 95% plus recoveries on this stuff, and that then you can start to insinuate that at least they know that with the flow sheet being buttoned up, that they can do it. Then you can start to back in what these costs are going to be. The company made one switch from what I was initially inferred, I will say not told, because Paul always put a caveat on the fact that they were looking to go straight into a PFS, a pre-feasibility study, versus what is normally a preliminary economic assessment, a PEA that is done prior to a PFS. He had talked about that over the course of last year as something they were leaning towards because they had already had a lot of information on this deposit, from all the drilling that Union Carbide did. Once they had buttoned up their own resource, they thought they could move right into that PFS, which is a more definitive study than a PEA. That said, they get the fact that they don't want to have these massive gaps in news in the market right now. And a PEA is done in 4 months, maybe even 3.5 months can get done. And a PFS can be an 8-month, 9-month, 10-month process. So they've decided it's cheaper to do a PEA. Let's take it that one step at a time. It's only 250 grand. These guys have 1.5 million bucks in the bank. They have plenty of money. And so this is the plan. The plan is you've got to get the metallurgical stuff buttoned up. That's going to be June. Right after that, assuming they come out and prove that they can create a viable, pure commercial product, then we move into a preliminary economic assessment, which will be out in September. And then you're going to have an idea. You're going to have a ballpark of what this thing is going to cost. And that's going to be a substantial benchmark. And I think at that point, guys like Danny and a lot of others will feel more comfortable. We're speculating. We're earlier speculative investors in this deal, assuming that because we've taken certain risk out of this play, they've got a shit ton of vanadium at a really great grade. It's close to surface. It's one of the only primary vanadium mines, potential mines in the world, and it looks phenomenal to me, the prospects. But we do have to dig into the details to find out where this is going. My contention is that regardless, and I hate to say this, but this is what I feel is absolutely true, regardless of getting that information now or getting that information in September in terms of what the eventual costs are, one of the things that's going to dictate the performance of the share price in the interim is the vanadium price and the performance in the sector as a whole. This is going to drive this thing. And that's it. Frankly, that's really one of the main things that's going to drive it. It's going to drive 80% of the performance in the stock. You can top off the last 10 to 20% based on the fact that it's going to be the specific benchmarks the company makes that will, just like the resource update, get people excited, give things a boost. But we are trading along with the sector. And I think one of the things that could derail the vanadium story is a global recession that would really have an impact on new development, and people would lay off in terms of a lot of new development in China, certainly. So that's one thing that keeps me up at night with the vanadium story. That said, with any sort of stability or growth in the world, there is a ton of signs that this is a very constrained market on the supply side. And vanadium's been running at a deficit for years. And I think that with the basing we've seen in the price of vanadium over the course of the last couple of months, there's a very good chance that in the course of the next 30 to 60 days, that we're going to see the vanadium price tick back up. And I can tell you right now, the main driver that will bring enthusiasm back into First Vanadium stock in the vanadium market is if the vanadium price ticks back into the 20s, it will be game on again. People will not be thinking about what are the processing costs of the First Vanadium mine. They'll be thinking about that at some junctures along the road, and we need to find that out. But this has been an exploration company. You have to go from exploration into a development story, into a production story. There are stages to this thing, and we have to be patient. We have to be patient to get that information from a third party that does the actual study versus wanting some sort of a, synopsis from management because of the work that they've been doing on the side. They can give us a ballpark on the CapEx, I think, but, and a couple of other elements. They could start to give you a range, but I'm actually not worried about that. I really don't think that the capital expenditure is going to blow this thing out and all of a sudden we're going to have some big surprise. I want to see this metallurgical work done. That's going to be a huge, huge piece to this puzzle to be able to lock down this flow sheet, because a lot of people are skeptical about vanadium in Nevada being economic, being able to be processed, the way that you're going to process this stuff. You've got the issues at prophecy development. A lot of people think that they're not going to be able to do what they say that they're going to do. And I'm sure there's people that are going to think that First Vanadium is not going to do what they say that they're going to do in terms of making this into a commercial viable product. That all remains to be seen, guys. But I think that First Vanadium clearly is an absolute leader in the sector. They're far along, much further along than all of these other plays that are starting to come to market that are putting vanadium on their name to try to get on the hype train, because they got a little bit of vanadium. They've got a little bit of vanadium alongside of their uranium or their iron ore to try to capture that. This is a pure play vanadium story. And it is the best that we've got out there. Besides, the only thing you can actually compare is Largo, which is a different animal in the sense that it's much bigger. It's in production. And if you want something that would be, less risky, because these guys are already in production, they've already done it, they're already cash flowing, then you buy Largo. But if you want the second level down in terms of now a development story, you get involved in First Vanadium. And so there's going to be lulls with news, but I'm not too concerned right now about a lull, because I think that the metallurgy, as well as they may do another drill program. There's some things that they can do this summer to continue to keep in front of their investors and news flow. And at the end of the day as well, they've already got a substantial story to tell, which can be out there and told to people once they also want exposure to vanadium. And wanting exposure to vanadium is going to be based on the vanadium price going forward. So that all said, folks, I'm in the market today buying some more stock. I'm bidding in the 60s, and I'm going to throw some back on here. If it goes back into the 50s, I'll buy some more. And the one thing that would concern me is if we broke the recent lows, which was, I think, 48 or 49 cents. I don't want to see that. But you've just had this thing. This is a 40% haircut in a few days. After a material resource update, we've had the reason for a big part of the decline, at least in the last 24 hours, has been from a big supporter, which has turned into a non-supporter, at least in the short term. He's made a mention that he will cover the company again if the vanadium price goes up. And that's the risk. If vanadium goes up here in the next few weeks, First Vanadium, what I told Paul Colley today is I said, regardless of all of this conversation, if vanadium is back at $25 a pound in the near future, First Vanadium is back at $1.50 to $2 a share, like that, because there is a lot of enthusiasm that will come right back into this market. So that is the primary driver of what's going to happen. And, let's watch vanadium. Let's watch Largo, which I think there is a good chance of a combination of vanadium turning higher here in the short term, as well as Largo getting a big boost from what I think will be their most profitable quarter ever that is going to be released. I believe it's 2 weeks from today. So that's my update on First Vanadium. I wanted to let you guys all know what I think is going on, what's been going on. And, you can make up your own mind if you want to be involved or if you don't. Have a good day.